Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Japanese yen, the last best opportunity for a trade, dollar versus the yen, was a rally into the resistance up at 95. So we pulled into support at 90. We rallied up into the resistance at 95. We pulled back down to the support at 90 and went lower. And we extended the lows. But at that time, I made a note that we were coming into some kind of pretty solid support on the dollar versus the Japanese yen spot contract. And we had already had one nice bounce out of there at the beginning of the year in 2010 at 85 cents. And this is the area where the Japanese bank seems to step up and intervene. That was the origin of the big rally from 95, which was the last time that they were intervening in the currency markets. We had a 10-cent bounce from 85 to 95 in January this year, or just before the beginning of the year. But now we're pushing through the backside. So the currency traders are ganging up on the Bank of Japan and saying, you know, you want to intervene, that's fine. We'll sell you all the yen you want. So if the basket turns around and starts to rally, we may have a bounce here against the Japanese yen. But I know they're terrible. They're screaming in Japan. Their exporters are screaming because they can't export anything with the cost of the yen being as high as it is. You're a company that makes a product in Japan and your costs are in yen and your revenue's in dollars, you really got a problem. All right, so we're making a new low with the yuck. And I'd wait for it to kind of bottom out again if I was interested in an opportunity. A shorting opportunity to the moving averages might work. But if the basket rallies, there could be a little possibility for some kind of a relief rally with the dollar versus the yen. So we'll see. Okay, and I think I'm coming up on the bottom of the hour, so I got through the presentation, got through all of the currencies that I had. Didn't get a chance really to look at any of the Brazilian pairs, but I promise you next time I do this, I'll try to focus a little bit more on those commodity currencies because that's where the action is. That's where all the money's flowing, into the strong countries. And the weak countries like the U.S. dollar is where they're borrowing the money. So if you have any questions, pop in. Okay. Hey, Michael, and hey to everybody from Online Trading Academy. I see a bunch of my friends. I've been on the road for the last year. I've been doing what I call the world tour, and so I'm out here, and good to see everybody. Hope to see you in the classroom next year, in the electronic classroom a little bit. Okay, so say hi to everybody. Tell them I said hi to everybody. Okay.
Steve, thank you so much. I just want to show everybody these skew charts at the ISE site. We have skew charts that everyone can view each day. You go to fxoptions.com, and here's the U.S. dollar Canadian. And there's an article that I wrote about options skew. So, for instance, what's interesting, Steve, is that if you group these currency skews, you have U.S. dollar Canadian, which, if you look at that green line, it's sort of that skewness or that smile skewness, and it has the same skew as the Swiss franc and the Japanese yen. So, and that's just a recent development. So I'm not sure why, but the Canadian dollar in the last about the last weeks has been acting a little more like the Swiss franc and the Japanese yen. So I'm actually watching that to see, why, because if you take a look at the Australian dollar, AUM, it's not anything like that, and that's the way the U.S. equity markets look. That if the U.S. dollar rallies, you'd see the Australian dollar sell off in a pretty big way. So just wanted to remind everybody that this is available at fxoptions.com. Steve, let me take some questions. Let me see if we can pass these through. Chuck says, will other countries such as China or different countries in Europe support the dollar to maintain their currency value advantage? What do you think, Steve?
Well, if I'm the Bank of China and I've got tons and tons of dollars, the last thing I want to see is the dollar go to 50 cents, because then my money is gone, okay? Half my money is gone. So I think the Bank of China, the central bank, is probably buying undervalued dollars right now and selling overvalued euros, just like last year they probably bought a bunch of undervalued euros and sold a bunch of overvalued dollars on the last rally. So there's no proof that a central bank actually times their purchases, but they've been talking about diversifying their currency holdings. So doesn't it make sense to buy dollars when they're low and sell euros when they're high, and then turn around and buy euros when they're low and sell dollars when they're high?
Sure. I mean, yeah.
So that's my theory about it. I think the currency traders in China are pretty smart.
And Steve, what's your take on the Bank of Japan intervening, saying the yen is too expensive, that everyone, that they're selling it, everybody else should sell it. But meanwhile, the market is not respecting them, really. How do you trade that?
Well, first off, I'm pretty sure you know that the Central Bank of Switzerland is down about $12 billion trying to defend the value of the Swiss franc against the euro. Right. And so it's, central banks don't go broke. They can, they can do what they're doing, and they can constantly average down or do what they need to do. But the Bank of Japan, the exporters are saying, look, if you don't do something to lower the value of this yen, we're just going to pack up and move to these other countries so that our revenue and our expenses are priced in the same currency. And then who's going to work in Japan? Who's going to get a job? Where are they going to work?
Great point. That's a great. So you prefer to stick with the charts, and sure you listen and watch the fundamentals, but stick with the charts.
Yeah, because the emotions of the traders, the accumulation, the accumulation phase has to be big institutions buying low, anticipating higher prices. Distribution has to be institutions selling high, anticipating lower prices. So if you follow those charts, you kind of see those footprints of those buying and selling activities. They lead to chart patterns which repeat over and over again. And those stages, 1 through 4, up, down, sideways, up, sideways, and down, Rocky Horner talks about them too all the time. It tells you if an asset's being accumulated or sold, distributed. So the technicals will definitely guide you in that light. And then if you know where prices have turned in the past, you kind of have a heads up where prices potentially could turn in the future.
Great point. Great point. Let's see if we can find. Here's one from me, Steve. Where do you find your article, meaning me, at FX Options? Is it in commentary yet? If you look at the skew chart, if you go to skew on the top of it, there's a link that you can click on. It's in PDF, Tony, so you should be able to get that. And then that'll help you understand these charts a little bit better. Let's see if we can take some more questions.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.